I'd like to know what kind of world we're living in when we can't consistently produce a gummy worm. They're stale.
Oh.
They're a stale gummy worm. Those are 2 for $3 and they're stale. That's not the first time this has happened either.
Well, that's because they don't sell a lot of them. What is that, store brand?
It's store.
It's not even like trolley.
It's just...
You're the only person that buys Circle K gummy worms.
Yeah. Hey.
That's why you gotta buy more of them.
Usually don't have a problem. I'm just saying, like, what sort of end of shift package did I get where the guy just gave up on life? And this is the quality that I get here.
Oh, so we're getting Grumpy Dustin today.
You're getting Grumpy Dustin. Yeah. Hey, welcome to the closing beat, everybody. Happy Tuesday. Unless you have Circle K gummy. Look at this garbage. Just try and enjoy a little snack, a little candy. Been a long day, but a good day. Stale. They're stale. Anyways, welcome. Hope you're having a good day out there. The stock market having a good day. We're going to talk about that here. We're financial advisors at Jazz Wealth. We do things a little bit differently around here. Not afraid to just be ourselves. What's with the suit and ties, people? Like the other advisors, they come in, they want to see how we do things, and they intimidate me. It's just weird, just be yourself, What do you feel like wearing today? Be respectable, but, let's go with that. Nonetheless, we're going to get started here today and talk about everything going on. You can see on the right-hand side of your screen, the stock market a little bit higher on the day. We got retail sales numbers that actually came out today. The headline numbers basically beat expectations, but when you break it down by category, the bulk of the growth was on online sales. Right, so they call it non-store online sales. So if you were to look up all the 13 or 14 categories of retail sales, up 4% when you look month over month. Gas stations sales up surprisingly. That might be me buying the gummies there, but gas stations basically up 4%. Electronics and appliances coming back into the world where we're able to get some of these things again. The semiconductor issue is starting to kind of wane itself. We're noticing supplies obviously being stocked on the shelves in terms of electronics, maybe not everything else. Building materials up 3%, auto parts up about 2%. Total retail sales beat by 1.7% or grew 1.7% month over month. So looking pretty good there. That was good to get things started for the day. We had some other econ numbers come out, and that was enough to push the markets just a little bit higher, not quite to new highs just yet. But if we look at the S&P, this is really fascinating to me. And I alluded to this and pointed out in our Notes from Jazz email, the weekly email that I do, that the market has already grown in half a quarter what it normally averages in a year. And basically right now we're at this is the halfway point, right? So we're halfway through the fourth quarter. Yesterday was November 15th, today, one day past it. And we're almost up 10% for one half of a quarter, 45 calendar days. You know what I mean? Like that, isn't that not odd to you guys to look at something like that and say, well, the market does it do this? There's only 28 other times in history that it's done this, which maybe sounds like a lot, but 28 times, right? 45 days we've grown this much? That's fascinating to me. And when we look at the S&P, we find we had a nice, normal, cool, calm, and collected uptrend, just trending right off the 50-day. It's what the average sort of swing trader, longer-term investor, it's what we love to see, just steady, consistent growth, minor pullbacks, uneventful pullbacks. We get a more decent pullback here at the end of August, end of August, and then all of a sudden, it's like a rocket ship. We're approaching 10% in less than 45 days, right? You just soak that in for a second. Some stocks in the S&P today that you're going to notice: Norwegian Cruise Lines raising more debt, raising more cash because they can. They're going to be issuing more debt. The stock's lower by about 7%. There are a lot of names. I'll cover some of them, I hope. The companies that are raising money right now because they can, not because they have to. Remember, Norwegian Cruise had to raise money during the downturn. So what'd they have to do? They had to pay more for that debt. Now that things are getting back on track, they can issue more debt to pay off the old debt and now get it at a lower rate. They learned their lesson there. Not bad. Hey, Southwest Airlines down a little bit. Airlines as a whole got a downgrade today from Goldman Sachs. They said costs are going to be an issue. That's going to put pressure on them going into the holidays. And so a lot of analysts, I guess, at Goldman Sachs are looking for new lows on things like Southwest Airlines, which are just a few points away from getting there. So you're going to notice some of the airlines, if you're looking around, just a rough day. It wasn't an oil trade. It wasn't anything else today. It was just Goldman Sachs saying, hey, these guys got increased costs and they need a lot of volume to get them through these increased costs. They're having a problem with volume right now, especially Southwest Airlines, because of staffing shortages, vaccine mandates, overworking, right? People are tired, want to take breaks. So that's what you have going on in the S&P, and it's still in second place year to date, by the way. The NASDAQ is actually in first place, beating it all. Also rallying at a really, really impressive clip here, up over 11% in just the first half of this quarter. The spread between the S&P and the NASDAQ is about 1% there. A couple stocks in the news there. Look around at Peloton. You got your low. I'll have to say I was wrong on that one, right? At least as of now, it looks like I'm wrong. You got good volume, good recovery here. If we look over at the news for Peloton for the day, they're going to be doing a $1 billion share offering. They're going to sell common stock. And originally the stock was down, I think, to start before they open. They're going to be selling common stock, raising more money, in fact, $1 billion, because they can, not because they have to. If you look at no, I'm going to go over here. You're going to click the right thing now. You got QCOM skyrocketing to new highs, up 8% on the day. They were extremely positive, ex-Apple, basically saying they're going to be able to grow despite the challenges they've had with Apple, and they're on their own. They're going to be able to stand as a growth company, and it worked, right? Stock was up 8% on the day, got a handful of upgrades as well. If you look at Uber, a little bit higher on the day, about 5%. Uber, the CEO, I believe, bought $9 million worth of shares. He did. Yep, he bought $9 million worth of stock. Well, I wonder why, right? Look, it's discounted. All the CEOs that are buying right now are buying their company stock that's discounted. All the CEOs that are selling company shares, which are a lot of them, we talked about that yesterday, they're selling with their stock at highs, and increasingly extreme highs. So pretty cool there. I'll point out the semiconductors had a great day, up about 1.3% on the day. Names like AMD almost back to highs. You got Intel as well playing along, not as much though. About a 0.5% gain on the day. A lot of people hoping that turns the corner there for Intel and some of those that have really struggled. Really, Intel's the only one that's kind of had the rough part of it there. If we look through some of the other names in there, where's my list? Where's my list? I got IDEX a little bit higher on the day. Akamai was the other one, up 2%. Nice recovery off lows there. Just quiet, let it do its thing. Everything's looking pretty good for them. And semiconductors as a whole, Xilinx was the other one. Brand new highs, incredibly extended here. Who buys that? That's incredible. If we look at names on the downside, got ATVI, weekday for that one, down 6%. Apparently they can't shake those sexual misconduct claims. It has now been reported that the CEO and top leadership actually knew about all this misconduct going on. Misconduct is the word they use. That they knew about it for years, and the only reason they did anything about it is because employees said, we are going to walk out if you do not do something about it. It's a tough one. You got Walmart down 2.5% on the day. They beat by earnings, raised their guidance going forward. They said e-com business is killing it. That's the reason we're raising our guidance there. They say they're all stocked up for the holidays, but we're not seeing the shoppers just yet. That's a problem. That's going to weigh on the stock, about 2.5% on the day. Also, Walmart has really trailed behind the S&P this year by about 20 percentage points. Actually, today, by about 22 percentage points. So really an underperformer if you're looking at names like, well, if you're just looking at Walmart. Retail sales, good earnings, all that was nothing. Couldn't shake the fact that they said, we're not seeing the shoppers out there. All right. Now, the S&P, let's do the Dow real quick, right? So the Dow sitting at new highs, not really anything new to mention there, maybe Boeing in a minute here, but we've got Guess the Dow, so we got to talk about that.
Yeah, your new leaderboard for today, we got Daniel, Zach, AJ, Jerry, your leader from yesterday, and Jorge. Those are your top 5. If you want to play, it's jazzwealth.com/guess the Dow. Get your guess in by Saturday. Go.
I love it, I love it. That hair's on point today, man.
It's pretty good. I'm having a great
It's, you notice how in Florida, it's like when it's humid out, the hair does whatever. When we get this first batch of cool, boy, our hair, our makeup in our family, it just like.
You have the windows down on the way to work, just it's beautiful.
It's my favorite part of visiting California. Every time, I've only been a few times, but you go to California, a lot of stuff not to like about that state. Sorry, but when you go there, your hair just is like, what's going on? Like, this is incredible. I'm glad. Good for you. Good. Enjoy it while you can.
Thank you.
All right. So when you look at the S&P, well, no, now when you look at the S&P, there you go. So we've got this incredible rally here. What I wanted to do was put together a list of sectors that were doing the same and or better. So we're going to get rid of that because we're not using that anymore. Come here and take a look at this here real quick. Here's a sector breakdown. What I did is I said, okay, I want to see every sector quarter to date. So in other words, we're halfway through the quarter. I wanted to see their performance relative to the market. This is a day behind, so we got a little bit of lag on our performance here for the S&P. We got about 9%, right? After today, we've got 9%. And the S&P is in the middle. And if you look at it, energy and materials make sense, right? From an economic standpoint. Inflation is good for energy and materials. Those are the sectors that do well when inflation is rising and or considered to be high. But what I don't get is tech and consumer discretionary, right? So you got to look a little bit further. Tech stocks typically don't do well with higher inflation because of their multiples and of course their debt. And so usually they're made up of growth stocks and everything, so they don't historically do well with inflation. So I don't understand that one. You look at consumer discretionary, this one, you got to give it a bit of a pass, right? It gets skewed data, gets an asterisk point, mark above it there, because Tesla makes up 15% of the consumer discretionary space now with its $1 trillion plus, or almost $1 trillion valuation. So you have this massive run up in Tesla, 15% is made up of this, so you can understand why that this is standing out. If you take Tesla out of this equation, this slides all the way down to just barely beating the S&P. Now, also notice that there are 5 sectors beating the S&P. They are essentially leading the charge for the S&P's rally. Industrials, energy, tech, materials, and consumer discretionary, and you have 4 of them with double-digit gains. All the way on the right-hand side there, you notice no sector is actually down so far for this quarter to date as we stand. Communication services 1.7 and healthcare, these are the only 2 that haven't gained at least 5% on the day, or on the quarter. What I'll also point out is these are incredible runs. The pace of the rally, given, hey, it's only been 45 calendar days. The pace of this rally is a little bit unnerving, right? If you're one of those longer term investors. So something to keep in mind for if you're looking to start new positions, looking to invest large sums of money here. Why? If your financial advisor or whoever's helping you, your Uncle Tommy, whatever, if he's saying you should put large sums of money in the market, ask him, okay, what are the odds of the market going up another 20% versus falling 20% first? What are they? Is that something that could actually happen? I think a lot of you would agree that even if you didn't know the numbers, the odds are we're going to fall first. Maybe not 20%, but we're going to fall first before we end up rallying another 20%, if and when we do. All right, looking elsewhere here, we got home building. So the home builders did well today. ITB is the ETF I use for that because that's a pure play home builders ETF. So it's a real quick way to take a look and see how everything's doing. You got an impressive rally there. The home builders index hit a 6-month high. Only the Northwest saw a decline, I believe. Yeah, it was Northwest was the only place that saw a decline there. If you look inside, you got Lennar, right? Hinting at a breakout. You see the line there? You got a nice sideways consolidation. It's moved up to highs. Hasn't expended too much energy to get to those highs. Kind of like the way that looks. Toll Brothers, if you take a look at that, it's somewhat similar, though it did hit new highs. Got a maybe like a tier 2 kind of a breakout if you're going to rank them. Pulte Homes, another one. Oh, no, sure. Let me go over here. Come on, man. Gonna need wireless mic. Pulte Homes trying to get above the 200-day. Not bad. It's weaker, obviously, than the rest of them. It's also trying to make its way out of this downtrend, and so far being successful there. I want to point out Beazer Homes. This would be the best performer recently, largely because of earnings there. Moving out of this base, again, it loses a point because the base is not at highs if you're a technical trader. But moving out of the base here and starting to set up, hopefully, for that move that takes you back to these prior highs. If nothing gets in the way, there's really nothing to stop it at this point as far as any news or anything. So I thought that'd be cool to point out to you. And also, crude oil, not a good sign if you're a bull. So if you're one of those that's like, I want to get involved in oil, energy, the sort of dirty, what do they call it? Texas tea, right? If you want to get involved in that, you wanted to see more of a pullback. Sadly, what you're getting right now is just a consolidation, and that's less strong for the hopeful eventual move higher. So anytime a stock pulls back, you set yourself up for a larger percentage gain. Anytime a stock hits highs and then consolidates, a lot of times you're not getting that oomph on that next rally because you didn't have enough people leave the stock, then they could possibly come back. If you ever happen to match that up or study that, that's what you'll find. Bitcoin also pulling back about 5% on the day. That's fine. I think a lot of people that like Bitcoin welcome the pullback. Nobody's really scared of this at all. So a pullback is welcome there. And that's some of the stocks and areas of the market to look at for the day. You had 76 new highs on the day, 3 new lows. Penn National was one of those that sticks out as making new lows. Can't quite get off the bottom there. And I don't know where you find a bottom. You could use the psychological number, $50, but I don't know where this finds a bottom. I think it just makes a new bottom at some point, like Peloton, right? It's hard to guess. Maybe after today's bottoming tail, that's exciting, but it's hard to guess where that bottom's going to be. You hope it happens soon because that would be, I would think, largely seen as getting to trading at a discount. Etsy hits new highs today. Remember we talked about earlier in the show. Retail sales numbers came out, and what was the outperforming area? Non-store online sales. Well, what does Etsy do? They don't have stores. They sell online. That stock hits new highs largely because of that. I think it got one upgrade. Nope, I'm mistaken. No upgrades that I'm aware of. So Etsy higher basically just on that retail sales number. Home Depot breaking out to new highs. That's going to be earnings related. If you look at Home Depot, they beat on earnings, revenues better than expected, raised their guidance, and that was good enough. That's you call it a triple whammy or whatever. It beats on earnings, revenue, and raises their guidance. That's a good sign. And if you go back to our data, we talked about this earlier in the earnings season. The stocks that are beating on earnings, beating on revenue, and raising their guidance, not only did they tend to gap up, we talked about that data, but they offered 1.17% more intraday. And so Home Depot would be yet another example of that, right? Studying those patterns and what investors are interested in doing oftentimes will repeat itself. Aflac, this is that breakout we talked about the other day, at least attempting to do that. It's getting right about there, almost hitting those new highs. Principal Financial did break out and is continuing there. I'll continue to say these are the stocks that you probably are focused on if you're playing momentum in the short term. Your Aflac, Principal Financial, there you go. SIVB, which is SVB Bank, not as exciting, but also moving to try to break out of a little kind of weird sideways consolidation there. And the MSCI is another one. Just broke out today. That's another one. You look at the financials that are outside of the Bank of America's, Morgan Stanley, Goldman Sachs, all that stuff. That's where all the action's at right now. So if you look at financials and you say, hey, what's going on over here? It doesn't look like much because these other little tiny stocks, they're not the ones that move. And actually you would use the KRE. So use the KRE. It's the lesser known, smaller market cap, smaller weighted stocks in the financial space that are doing all the moving right now. So that's somewhere to look for you, maybe something to point out. Stocks in the news. We talked about Home Depot already, and that one's looking pretty good there. Advanced Auto Parts, another one. Advanced Auto Parts had a great earnings quarter there. They did really, really well. The stock pulled back on that news. I think that's welcome. Hopefully that continues. But other than that, these stocks, Advanced Auto Parts, AutoZone, O'Reilly, LKQ, they're just all sitting at highs or very, very close to highs. So action there as well. Lucid, I don't get it. Lucid worth $55 a share. It's now worth more than Ford, General Motors. That's what is approaching $90 billion market cap. Yeah, just under $90 billion there. I don't know what you're doing there. Lucid has 17,000 reservations. Now let's just try something. It's $169,000, right, for one of these cars. Let's just say they sell 7. Let's just say they actually transact 15,000 of them. Oh, that's $2.5 billion. Doesn't matter. They won't make a profit. They've already admitted that. All the reservations that they have, if they sell them all, they won't make a profit. Unless somehow they could make them all by tomorrow, but that's not going to be the case. So careful on that one, right? What's going on here? This is exciting. I get it. It's an exciting place to be, but is it so exciting that you want to chase it after it's already up 100%? From just, 3 weeks ago? So a tough one there. Rivian also hit new highs, $172. I'm not sure I get that one either, why we're chasing that one, but I don't know. Maybe it has something to do with Amazon being attached to it. Boeing down just a little bit on the day, but Indian airline Akasa, I think they're called Akasa, is how you say it in India, Akasa Air. They bought 77 or 72 737 Maxes. That's close to $10 billion. Good news for Boeing. Hopefully, you can see the news momentum. Do you see it changing a little bit for them, where more and more is good news, less and less is bad news? So hopefully that's the start of something for Boeing, because they've been through it, right? Mercado Libre down 5.6% today. Basically, all the stocks that sold off in any way more than like 3% today is because they're raising money. So Mercado Libre is actually selling $1.5 billion in stock because they can, right? I mean, think about it. Take your personal finances. Best advice I could give you right now. Raise money when you can, not when you have to. And right now, you can raise money from any way you want, right? It's there for the taking, and likely at really low interest rates if you're not afraid of having a little debt. So that's what all these companies are doing. They're raising money now because they can, not necessarily going to spend it. It's not like they're going to buy other companies or anything that we know of. They're just saying, you mean we can have this we just sell the shares and take a 5% hit on our stock? Yeah, all right. Yeah. We'll put $1.5 billion in the bank. Think about that, right? These guys are no dummies. SoFi was another one. I haven't looked at this in a while, but SoFi down about 5% on the day. Why? Because they're raising money, right? SoFi is going to sell stock. What are they looking for? What's the number there? 50 million shares. Wow, how about that? Oh, and they're selling them less. So let's say 50 million shares times, 2150, I think it was. Oh, there's $1 billion. Isn't that funny? Look at all the billions getting raised out there. For what? Now, these guys are growing, so they're probably going to invest in tech and stuff. But, hey, raise money because you can, not because you have to. Follow what corporate companies do with their personal finances, right? How do they organize their bank? They refinance debt. They sell off shares. They find ways to raise money. They take lines of credit. They're just there, ready to go. You know what I mean? All right, I'll take your questions if you have any. I think I've covered everything I want to cover. Also, today is W.C. Handy's birthday. Right? He's the blues trumpet player that was famous for saying, life is like a trumpet. You only get something out of it if you put something into it. Huh? You like that one, don't you? Hello? That was a good quote.
I mean, it's fine.
It's fine? How do you go fine on that? That's a great one. You got a quote? You want to hit me with one?
Just do it.
Oh, you can't do that. Now we can't monetize the video.
Oh.
That's it. They're going to come knocking, man. All right, what else do we have? Earnings tomorrow. Baidu, Lowe's, Target, TJ Maxx, Bath and Body Works would be the one there. Cisco, Copart. That goes into your AutoZone and Advanced Auto Parts category. Sonos, which is on a streak here, actually. The last 3 earnings reports, it's been up after reporting earnings. And then, of course, NVIDIA will be reporting as well. Should you be worried about QCOM becoming too extended? Yep. Especially if you're hoping to hold for the long term. You might consider trading around your position, checking out how your sales are calculated in your brokerage account. First in, first out, last in, first out. You may want to change that. May have already covered this, but can you give a technical analysis of Tesla? And if today's move back up to 3% shows a possible bottom on, so you're saying this thing. Okay, I got what you're saying. So very extended rally here, pulls back. Is this the bottom? So here's the rule of thumb. You never buy the first pullback after an extended move. Or some people call it climactic or parabolic, whatever you want to call it. You don't buy the first rally, which this could be argued to be the second, so I'll give you a point on that one. So it pulls back. You get your first attempt at a rally. What happens? There was no need to buy that, right? So do you have consistent buyers willing to pay basically over $1,000 a share for this stock? I don't know that you're there yet, right? I think the $1,000 is your back and forth number here. So I wouldn't be in a hurry to buy it. I would argue that stepping into it may be the way to play here, right? Take a small position just to keep your eye on it. Yeah, Dollar Tree. I saw that one. The Dollar Tree just all of a sudden takes off there. I got a couple upgrades today, I believe was the game plan. Wells Fargo says you got to own this. You got to be overweight this stock, which just means be a little bit heavier in your position. Price target of 175. Now their price target, hold on a second. It was not 175, I can tell you that. It was a lot lower. I remember this one. 118. So they went from 118 to 175. So do you think they're bullish on the stock? Yeah, that'll help. Oh, Sam. Yeah, that's right. Molson Coors. Not Molson Coors. Come on now. There you go. Sam Adams. Trying to come off a low. I would agree with that. It's not very evident yet. It's not the most exciting thing, but remember where it came from. So a lot better looking here. I don't know that I'm going to be one that dives in and gets all aggressive here, but I think you're closer to a bottom than you've been. Or at least it kind of feels that way. Yep. You want to have a breakdown of the companies splitting. In particular, what do you mean? Doc? What you mean? Yeah. Thoughts on there's a couple tomorrow, actually. Got a big day for IPOs tomorrow. I don't follow them on their IPO day, but I saw the list this morning. I thought, well, that's a big list. Yeah. Got $1,900 credit spread on Tesla ending next week. Good luck. Good luck. Why next week? Oh, you're trading weeklies? Trading weeklies? Mm-hmm. Focused on growth. Yeah, we could do a historic look back too on that with some of the others that split. And one in particular that sticks out. I just happen to read a lot about it. I don't know why, but Victoria's Secret and Bath and Body Works. I spent a lot of time looking at the picture, reading the articles on that one. Yeah. Oh man, rewards points for Dollar Tree. It's an idea. You got to tell them now, man. Mm-hmm. Any advice for a future financial advisor? Oh, really? Kevin, you coming in? You joining us, man? Future advice for a future financial advisor. Probably, and I'm not discounting these companies. I just, I think there's faster ways to get up and kind of build yourself. Probably wouldn't work for like Trends America, some of the bigger like Franklin Templetons and stuff. That's more of a sales-oriented game. Not a bad thing. Every company's got to have sales, but it'll take you longer to get built up, right? And get any real, not respect, but any sort of credibility. You know what I mean? So I would say smaller companies that are independent financial advisors in your area, just walk in, be like, hey, man, I'm ready to help. What can I do? Independent financial advisors will help you grow faster than like a Raymond James or something. Yep. Not that those are bad places. I don't want to hear it. All the Raymond James people. Raymond James is in our town, so anytime I say something about Raymond James, I get a lot of emails. All that good stuff. More stats plays? Yeah, there just hasn't been a lot. Yeah, because you need volatility to have worthwhile stats plays because you have more stocks that sort of fall apart. Mm-hmm. Harry's got a good point. Probably shouldn't steal. You know what I mean? That's frowned upon. You know what I mean? If you could just let them keep their money, yeah, that'll keep you ahead of the game. Hey, thoughts on buying stocks at 52-week highs to catch the breakouts with tight stops? I'm all for it. Yeah, that's why I do the new highs and new lows list every day, because stocks that are close to new highs, especially on down days or little flat moments in the market, they're showing you something. And it's an easy way to grab a quick watch list, like the Aflac we talked about. It's an easy way to grab a watch list of 10 quick stocks, and that's all you need. You don't have to be looking all over the place. Yeah. I do the research, you know what I mean? Doesn't matter what the company's name is. When I know. How much GMA and AMC do we own? No, none. I'll be honest with you. No, I don't play those games. Not for me. Nope. Not even during all the hype. I've certainly answered a lot of questions about it, but you know me in extended stocks. I don't do it. Now, if GameStop wants to turn it around, they're going to start trending higher. They're going to start showing profit. Hey, maybe one day it makes itself back. I'm rooting for them, but I'm not going to participate, and have not participated. All right, we'll wrap it up there and call it a day. I appreciate you guys hanging out with us here today. Enjoy the rest of your day. We'll be back tomorrow to do it all over again, and I'm going to go back to eating my stale gummies. See you.